So in this video, I am going to tell about how you can check three important things before entering a trade. So here I'll discuss all those three important things. So please watch the video till the end to know what are those three important things which you should consider as a trader before entering into the trade. So first thing is that the market structure. So you should know about the market structure, how the market is going to behave. So for that you have to understand the trend. What is trend? You must have heard from many of the traders, trend is my friend. So what is trend? Trend is of three types. So here you can see there are basically three types of trend: uptrend, downtrend, and the consolidation or the sideways trend. So uptrend is when the market is moving in upper direction, that is known as the uptrend. What is downtrend? So suppose the market is moving in downward direction, that is a downtrend. And what we are say as a consolidation or sideways, so suppose the market is not moving anywhere but is within a range, so that is known as the sideways market. So first you need to identify in which phase the market is, what is the structure of the market. So that is one of the important thing you should understand. Let's try to understand this with the help of a chart. What is the uptrend, downtrend, and a consolidation or a sideways, and what should be your decision as a trader. So as I mentioned, as the uptrend, definitely as a trader you should always look for opportunity for buying. So as a trader in a uptrend market, so suppose from here you can see the market in a uptrend mode. So here you can look for an opportunity to buy. Similarly, if the market is in downtrend, suppose here, from here you can look for opportunity to sell. And what you do in a consolidation or a sideways market, so in a consolidation or sideways market, it's always better. You will get an opportunity for buying and selling both, but as a trader you can stay out of this trade as well. But it again depends on what kind of trader you are. If you're an option buyer, if you're a future buyer, if you're an option seller, so you might get that kind of opportunity, because as an option seller you will definitely get good opportunity in a sideways market as well because of the option premiums. But if you are a directional trader and mostly a future trader and all those, so you will not get that kind of opportunity in a sideways market, but you will definitely get an opportunity in an uptrend or a downtrend. So this has to be identified, like what kind of trend is this. So as a trader you should first identify the trend. Then the other thing is that if you are not able to identify on a time frame, basically there will be times when you are not able to identify whether it is an uptrend or it is a downtrend. What decision should I take as a trader? So what you should do, you should always look for a basically a higher time frame. So higher time frame is always important. So if you are suppose trading on a 15 minutes time frame, so always look for an hourly time frame. So if you're trading in an hourly time frame, always try to look for a 4-hour time frame. So here suppose in a 1-hour time frame, I found that I'm not sure at this point of time what should be my decision here. Suppose what should be my decision? Is it market in a sales zone or in a buying zone? I am not able to take a decision. So what I will do is that I'll try to make this as a basically maybe a 4 hours time frame. So if I do it as a 4-hour time frame here, then I think I can take a better decision. So here on a longer time frame, if I see the market is already in an uptrend, so I can take a clear decision like, yes, now I have to go and buy in this kind of market. So this is how you take the decision as a trader. Same goes for the selling as well. So when you're not able to take any kind of decision, try to take the decision on a higher time frame, and I think that will solve your problem and you will be able to identify. Still, if you're not able to identify what kind of trend is it, it's better stay out of the trade. It's fine as a trader if you don't trade for a single day, it's completely fine. So the other thing which I see before entering any trade is, so the second point which you should understand as a trader is your zone. So your support zone and your resistance zone, or which we say as a supply and demand zone. So you have to first identify your support zone and the demand zone or the resistance. So this I already mentioned in most of my videos as well. So you have to identify that. So let me draw that support and so let me remove this and let me see in the market if what kind of zone we are forming. So you have to identify. So drawing the support and resistance, I have already defined in many of my, I have already mentioned this in many of my videos which you can refer. And suppose this is the support and the resistance zone. So you have to identify from the support and resistance zone if market is going to bounce on this. So get a better confirmation on this. Again, I would say you can go on a higher time frame and see if this support and resistance, you get a confirmation on the higher time frame as well. From here as well, you can see, you can get a confirmation, but I would again say it's just not based on only one single thing where you get the confirmation. You have to look for more confirmation. So I will be using, either you can go, the third thing which you can go either with a trend line, or you can use any kind of indicators. So trend lines also you can develop, or you can see like what kind of basically is it supporting your trading, is it supporting your supply and demand zone, or what kind of it is forming. So that is your third important factor which you have to understand for making any entry in a new trade. So when you enter the trade using the support and resistance, and the first thing, the market structure which I have mentioned, and with the help of a trend line, you can use some indicators as well. Might be you can use indicators like very simple indicator which most of the traders also use, VWAP. So if the price is below the VWAP, that means it's already negative, the market is. So with, as I always mention, that it is not only just one thing which will give you confirmation, but a combination of 2 or 3 things will give you a confirmation that whether you have to make an entry in that particular trade or not. So this combination will again, if with these 3 combinations you find it that yes, it is the perfect timing for entering a trade, then you just enter it. Then again you have to keep in mind that when all this criteria fulfills, you don't have to immediately jump into the trade. You have to look for, again, other confirmation which you can do is the candlestick pattern. What kind of candle, the next candle which is forming, because chances might be there that you just enter the trade in any kind of fake breakouts or fake breakdowns as well. So your candlestick, if you are getting a bullish or a bullish engulfing candlestick on that kind of confirmation, it's always a good signal and it will give you a confirmation, a confidence to enter that particular trade. So these are all the key levels which I also follow for making a decision while entering a trade in the price action trading strategy. Hope you like this video. If you like, please do subscribe to the channel, and I'll try to make a separate video on how you can exit your trade, or how you can set a target and a stop loss for your trade, and how you make a decision for exiting your trade, same as I made for this entry trade. So thank you everyone, and see you again in my next video. Thank you.